Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this December 20th. So overall it is a slightly positive day for the indices, but just going positive as you can see with this green candle here. Now, I might just add that this is a pretty weak bounce that we have experienced, considering that we had a reversal from this 410 level and sold straight off into what looks to be a little bit of a support, as you can see by this pivot over here in this wide range red bar. Naturally, I would have anticipated more of a robust bounce, or at least to be closing near the highs of the candle. Excuse that alert, but that is not what we have seen. And this is probably due to a couple reasons. Obviously, the market is still anticipating that the Federal Reserve is going to be taking their terminal rate to 5.1. The 2-year yield is not displaying that, so there's kind of a divergence between what the bond market thinks and what the Federal Reserve thinks. And that Fed, who are we going to believe? Well, considering the bond market deals with a lot more money flow than the Federal Reserve, we have to naturally respect the bond market, and typically, 80 to 90% of the time, the bond market is the correct one. Now, with that understanding in mind, considering the bond market doesn't think that, let me just flip to the 2-year yield just so we can show this chart. Considering the bond market doesn't think the Fed is actually going to take the terminal rate to 5.1, we have to assume that peak rates have hit, and typically when the bond market has that divergence, it is kind of giving a little bit of insights that if yields were to raise any higher or challenge that 5.1, something would break. Now, I'm still in the camp that something eventually is going to break, which is perhaps what the bond market is telling us. The fact that the Fed has expressed taking the rate all the way up to 5.1, despite the 2-year yield being stuck here at this 4.26 level, it really makes me question the fact that something is coming very, very soon. We don't know what, but if the yields start to fall sharply, that is signaling a massive deflationary event. Now, if we just take a look at the S&P, we are getting a little bit of a late day sell here. You can see that there's been distribution signals all day. I just want to show you a really, really interesting channel, which we were basically trading in from the start of the last couple days. And you can see this channel perfectly over here. Even if we carry this forward, you have these major pivots over here. Basically a pivot high, pivot high, pivot high, and that's been your clear resistance level to beat, and you do have support. So considering we failed on here on 1, 2, now 3 attempts, it does make me think that these markets are going to head lower. If we take away that channel and look to the daily chart, you can see that we still have this massive technical gap that needs to be filled. I still think that's going to be a massive, massive level on the S&P 500. Considering that this bounce was very, very weak and minimal, it does favor that we could see some continued downside selling. Now, the volume was extremely light today in comparison to most of the last 1, 2, 3, 4, 5 trading sessions. So realistically, it shows you that there's not many confident buyers willing to help prop up this market. So let's just keep that in mind, that despite we got a little bit of a short-term bounce today, the buying pressure, the volume was very, very anemic in comparison to the last 5 days of sell side pressure. Taking a look at oil, oil did catch a slight little bounce today. Oil's up just over 0.35%, but still hugging this major, major resistance level. You can see that we've now challenged this level 1, 2, 3, 4, 5, last 6 trading sessions. You are at this downsloping resistance line, so it's kind of make or break for oil. If oil can't get above this, then it likely goes right back down to the low range of this channel. You can see that there's a clear wedge pattern occurring. It is a downsloping, so it does favor a move to the upside. Natural gas got absolutely slaughtered today, basically breaking through these major pivots. You can see how weak this triple bottom has been. Natural gas had an impeccable sell-off from this 665 area all the way down to this 525 area. If natural gas continues to see sell-side pressure, I will look to go long and play it. You can see we have a beautiful symmetrical channel in the event that natural gas comes straight down to this between 470 and 450, I will look to start accumulating a long position, even though I do think that natural gas heads lower due to the fact that you have this major topping pattern in play, and it looks to be finally triggering potentially with the confirmation day tomorrow. So obviously with natural gas breaking down, oil trading at these lows, I still think energy stocks are going to see a lot more sell side pressure. The market is closed. It did finish slightly up, but again, very, very weak, so to speak. If we take a look at the QQQs, the Qs are also very weak. We do have a technical gap fill still that it needs to fill, so I do think we see that gap fill sooner rather than later. Taking a look at the IWM, the Russell, small caps, obviously the Russell had a little bit of a bigger positive day compared to the other indices, but it has shown more relative weakness. In comparison to the S&P, you can see that the S&P gap has not been filled, as opposed to Russell did fill it over here. Let's take a look at the dollar. So last night some interesting things happened with the BOJ raising rates. The dollar saw a nice little sell-off due to the fact that the Japanese yen started to rally. But overall, the dollar is still oversold in my opinion. And this downsloping pattern here in and around this range still favors a move to the upside. If we flip to the weekly chart, you still have a beautiful weekly bottoming tail in effect from last week, which was bounced right off of that weekly 50 moving average. So until we take out and close that below, I still naturally think the dollar will see a likely bounce. Now, talking about the yield curve inversion, long end yields have been surging as of late, and this is actually why we sold our UBT, took profits. We did go long TMV, but I didn't like the pattern. I thought it was breaking down. Needless to say, we should have probably kept that trade. We would have been up on the trade significantly. But long end yields, the 10-year, the 20-year, they're actually looking very, very bullish in the short term and poised for more upside. If we simply take a look at this 10-year yield here, I have a major level around the 3.78 that I think the 10-year is going to be hitting before we could see some consolidation and a pullback. Now, the reason that we're seeing these long ends yield, if you actually look at I believe it's the JPY10, the Japanese yields had a massive rally. Let me just actually search that. So Japanese 10-year yield, sorry, I just couldn't remember the ticker. There it is, the JP10Y, so I had a little backwards. But you can see this parabolic move from the Bank of Japan, raising rates again, and this is a substantial move. This is what strengthened the Japanese yen, which obviously caused a little bit of a sell-off in the dollar. But with Japanese raising their rates, we have to remember that the Japanese is the third largest economy in the world, and they also are the biggest debtor nation to the United States, meaning that they hold the most amount of US treasuries. And when a country of Japan's size and magnitude for the global economy starts to raise their rates significantly, I mean, you have basically 100% move in their rates, that certainly means that they're going to slow down their economy. And if they are the biggest buyers of US treasuries, as well as the third largest economy in the world, that is naturally going to put pressure on the overall economic demand and global output, and that should slow down the rest of the stock market. And considering that Japan produces a great deal of manufacturing, specifically in the auto sector, naturally we have to anticipate slower growth coming from the third largest economy, which will have an effect on the S&P 500, considering roughly 40% of the S&P 500 earnings come from outside of America. So just very interesting. If we take a look at the 20-year yield, the US 20-year, I'm looking to eventually go long the UBT play again. We've played that position for a lovely gain. Where I'm looking for a retrace to pick up is basically this 4% level. As soon as we pierce that 4% level, I'm going to start acquiring UBT. Now there is a gap fill all the way at 4.15, which will likely coincide with you piercing the 50 daily moving average and possibly getting a retrace back to this upsloping trend line. That would be a great secondary level to keep accumulating on the bond play, because I do think that we will eventually go into a deflationary scenario that causes something in the financial system to break, which causes central banks to start to really pivot and lower interest rates. But we're kind of far from that. I haven't got a signal yet, but it is nice to start accumulating bonds. Taking a look at gold, gold had another strong move. You can see this power rally all the way up 1.71%. Again, gold is still overbought in my opinion. You never really want to see this upsloping consolidation. This is not bullish consolidation, this type of pattern. The fact that you're still trading up at resistance, I still see a move coming back down to 1720. We are shorting the SLV, which we are slightly in the money on that trade. This is a day trade, so it's a rather bigger position, which I am comfortable holding overnight. One of the reasons I want to short the SLV, if we simply look at the weekly chart, if you take this trend line connecting pivot to pivot to pivot, you just tag that pivot and it coincides with the weekly gap fill around 2230. So that is a huge technical level. You're still in an overbought state and you still have this beautiful weekly reversal signal from last week on volume that you're getting this beautiful retrace. So at this level, what this tells me is that there is a lot of sellers that should be waiting here basically over the next few days, which should send silver lower at least to this 21 or even these technical gaps around 2090. So I do think that we're well positioned to accumulate a short position on silver and watch that trend, a likely outcome trend lower. Let me just see if there's anything else I can touch base on. So Bitcoin is trying to recapture this bullish scenario over here. Now I want to urge you to be very careful with Bitcoin if you're thinking about going long. Basically, this is the original failed bullish pattern, which you broke the pattern and you did confirm on the daily chart. Now you're getting a simple retrace as if it's trying to suck in new money before it takes this price action lower. All time frames are still bearish despite having a short-term pop on Bitcoin. So let's just be mindful, we're still net short Bitcoin and I plan to keep it that way until the charts tell us otherwise. Really, that sums it up for today's video. I just want to say congratulations. We did cover our Pinterest for a lovely 9.2%. So if we pull up the pin chart, you can see, look at that beautiful cover just before the technical gap fill, but I started seeing some accumulation with the market strength and I wanted to get out of that trade, which was a beautiful cover nonetheless because you can see that it did bounce substantially. We also covered our Costco trade despite me thinking Costco is very likely to go lower. Costco is short-term oversold. You can see where we covered on this yellow line here and it's got a nice little bounce off of that level. I would reshort Costco if we retrace back to this neckline break. That's kind of my expectation. Costco is a very technical chart. It usually retraces and fulfills the technical upside and downside patterns. So a very technical stock should have a likely outcome to retrace back to this neckline, which would be a beautiful short opportunity. If it managed to have a daily close back above this neckline, that simply means we can look to exit it or basically stop out. And then we also did cover our ISRG for a small loss today. This one's been a simple powerhouse. One of the reasons I wanted to cover this just for a small loss, sometimes it's better to take a small loss on a trade to basically be able to get back into a short position at a further date if it bounces. But you can see it had a pretty sharp sell-off from 285 all the way back down to 257.50 here. We did cover it at the lows of the chart and it has had a nice little bounce. Do I still think it goes lower? Yes, but these powerful names, since you're in support, tend to have a little bit stronger bounces considering it is more of a safety play in the healthcare and it does have a lot of buying pressure that has been keeping it up at these elevated levels. And it's always an opportunity to reshort, in the event that, say, it popped all the way back up to this gap fill around 280, that would be a prime area to continue accumulating a short on it again. Let's just touch base on Tesla. Tesla is getting very intriguing and very interesting. Tesla was the big loser today, down 8% on the day, even though it's already been obliterated. You can see on the weekly chart that this beautiful topping formation is playing out and looks to be coming to fruition. Now, you're not going to see Tesla fulfill that downside target right away. There's going to be massive bounces, but we're coming into some beautiful technical support here. You can see this multi-week consolidation range. There's a gap fill around this 136 level, which we're literally basically $1 away from. So that should be a great level. If we can open up tomorrow and get a flush, you can see that you have that gap fill. You also have this beautiful parallel channel, downsloping channel, and you have tons and tons of support. Even if we flip on the weekly chart over here, You can see that there's massive support. There's a weekly gap fill around this 130 level as well, and this impulse move bar. So we are approaching levels on Tesla that make it very, very intriguing for a swing trade. And even if it does trend lower, you even have these larger symmetrical channels that will act as support, ranging from the 110 all the way to the 120 range. So tons and tons of support to start accumulating. A position down here, I just want to see Tesla maybe flush down one more day before I start accumulating a swing long position. Even a day trade, I mean, even if you tried day trading Tesla, I did day trade it early in the day over here for a nice little gain, but you can see the sell side pressure that just took place in Tesla. And it's going to be really interesting because most likely the bounce in Tesla is probably going to coincide with Elon Musk announcing a CEO for Twitter, which would inevitably free up a lot of his time if that announcement does take place. And obviously with his Twitter poll recently, the people have voted that they do want Elon Musk to step down as the Twitter CEO. So obviously that should help the Tesla stock when that announcement comes to place. And maybe that announcement is tomorrow. If we flush down, hit technical support, we could see an announcement from Elon. The charts have a very weird way of timing those fundamental news catalysts as you hit technical support. So that really sums it up for today's video. We did add to our BA short as well as our long IMAB. So again, we're still accumulating some key shorts. We are still net short, but we've pulled off a bunch of profits. We do have a few long trades like PayPal, which I'm still seeing accumulation take place. Let me just pull up the PayPal ticker here for us just to view quickly. So PayPal, you are seeing some accumulation take place. You had this daily bottoming tail yesterday at this double bottom support. You didn't officially tag the double bottom, so maybe there's potentially a little bit of downside to the 67.50 level before you break up. But again, PayPal is at a reasonable valuation. Do I think it goes lower if the markets break down? Probably does if big caps really start to sell. But again, it should start to catch inevitable relief bounce here, considering it is short-term oversold. And the fundamentals do make sense right now as the markets are priced at these levels. So again, considering that we played PayPal long over here on this massive bounce, and we're all the way back in buying it at an even cheaper valuation, just makes a lot of sense in my mind as a technical analyst. So really that sums it up for today's video. Obviously, we're going to keep watch of yields, the dollar, but up until now, we could just be chopping in a sideways range on the S&P 500. The volume is extremely light. I'm still thinking we're maybe going to see some tax loss selling. You can see that basically the last trading day of the month is on the Friday, which is the 30th. So there's still about 1.5 weeks of potential tax loss selling that could occur. But overall, in a light volume environment, stocks do favor upside, and we could potentially start to see the volume dry up from today, considering that we had basically 5 days of higher than usual volume, and today it's starting to subside. So let's just see how things progress tomorrow, but there's a lot of interesting chart setups, and certainly I do think we're well positioned to head into